Hi everyone, Stacy Whiter here on behalf of Campus Mortgage with some quick tips for you on how to use rental income on FHA mortgages, part 2. But real quick, before we get started, just a quick reminder, this video is for informational purposes only and should not be considered legal advice or used in place of the FHA guidelines. Also, this video was created on January 9th, 2017, and the information is subject to change without notice. All right, so let's take a look at some rental income calculation examples. And we're going to split this up into how to calculate effective income from the subject property and then also how to calculate effective income from another real estate holding. But let's start off here with effective income from the subject property. Let's look at the requirements. So if the borrower has a 2-year history of rental income, you're going to add the net property rental income to the borrower's gross income. Now, make sure that you do not reduce the borrower's total monthly payment by the net subject property rental income. So I'm going to show you the exact calculations in just a second. So you're going to average the amount, typically the 2 years shown on the Schedule E, but depreciation, mortgage interest, taxes, insurance, and any homeowners association dues listed on the Schedule E can be added back to net income or a loss. So let's take a look at an example of this on a sample tax return. So here's just an example of a Schedule E on a tax return where the borrower only has one property. Let's blow up the section where you can see all of the rents received and the expenses. So to calculate this, the first thing that you would look at on line number 26 at the very bottom is you would notice that there's a loss of $4,250. So you would start with that net loss in your calculation, but from there you would then add in depreciation of $1,800. Mortgage interest, you would add back that's $7,300, add back taxes, which was $3,000, and add back insurance, which was $800, and HOA dues of $400, which gives you an effective rental income for that one particular year of $9,050, which can then be added back to the borrower's income. Now remember, you're obviously going to be averaging 2 years. This is just an example of 1 year. So when you're calculating the effective income from the subject property, and now let's say that they have limited or no history of rental income, then you're going to use the lesser of the monthly operating income reported on the Freddie Mac Form 998, or you're going to use 75% of the lesser of fair market rent reported by the appraiser or rent reflected from the lease or other rental agreement. Now let's talk about how to calculate effective income from other real estate holdings. Now this is how you would do it if they have a 2-year history of rental income. You're going to average the amount shown on the Schedule E for the properties that are still owned by the borrower. That's the key. You need to make sure that if they own that property in 2015, that they also owned it in 2016 to be able to count the income. You can add depreciation back to net income or loss, and negative net rental income must be included as a debt or a liability, so it is different than on the subject property. Now, if they have less than a 2-year history of rental income on that other real estate holding, you're going to annualize the rental income for the length of time the property has been owned. And then you'll document the date of acquisition when they purchased the property with a deed, settlement statement, or similar legal document. Now, if they have limited or no history of rental income on that other real estate holding, so that means they had no rental history from the previous tax filing, then you're going to deduct the total payment, the PITI, from the lesser of the monthly operating income on the Freddie Mac 998 form, or 75% of the lesser of fair market rent reported by the appraiser or the rent reflected on the lease or other rental agreement. All right, well, that's all for now. Thanks so much for watching. For more tips and videos, please visit campusmortgage.org and look for our weekly tips and videos designed for all mortgage professionals, including underwriters, processors, loan officers, closers, and post-closers. Have a great day, and we'll see you next time. Bye-bye.